Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, I can hear you loud and clear, Coach Jay, on another wild day.
Welcome to all of our buzzer beaters. What a wild day that it was in the. Hopefully, everybody made it out all right. Did okay in these crazy markets that we have. But welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay, been a top step performance coach since June of 2023, trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Top Steps for 2 years now. I've been involved in the futures trading industry for 4 decades. I'm here to share my experiences, some wisdom, and help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. Looks like we sound good. Where can I find the recordings for the 150K courses? We're figuring those out. They might live in Discord. We'll figure out a place for those, and have we'll let everybody know. We're thinking maybe we send them out in an email to everyone that signed up. But the recordings will be made available. I did my mindset session last night, Coach Paul. I thought it went pretty well. Um, some good feedback from the traders. Have you started yours yet? How do you think it's been going so far?
Um, I went well, except for my recording didn't work, and I'm
Oh
trying to
man,
redo it.
yeah.
Um, so um, Discord is a funky place.
Yes, it is.
We used to live there. Now we live on YouTube. We don't, but I think that's going well. There's been some positive reaction. I've seen other coaches. I enjoyed mine. I think it's really important. Like I said, if I went back to when I started, I had none of that knowledge, and I
Yeah,
think it's an imperative to understand that when you're trading.
for sure. For sure. Yeah, it was a lot of fun yesterday. But let's get into these markets. Markets were pretty crazy. Let's see what we had as far as news goes. We do have some earnings coming out right now. IBM earnings just released. I know Chipotle is releasing as well. I don't see the numbers out for Chipotle yet. But we got IBM operating earnings per share came in at 1.6, $1.60. Estimates were $1.42. Looks like they beat on revenues as well. 14.54 billion. Estimate was 14.4 billion. They got some cash on hand. 1.96 billion. Estimate was 1.79 billion. So it looks pretty good. Looks like pretty good numbers for IBM. I feel like IBM sometimes is the forgotten tech company in all of the tech world that we're in right
Isn't
now.
isn't that the truth?
Yeah.
But they're we forget how large they are.
Yep. Yeah. Yeah. Seriously, I'm sure like a lot of government contract and things like that still use IBM products, boomer tech as they say. Texas Instruments, they're still selling calculators. Earnings per share $1.28. Estimate was $1.07. I'm sure Texas Instruments does a lot more than sell calculators, but that's where my brain goes to first and foremost. Uh, Revenues 4.07 billion. Estimate was 3.91 billion. And Chipotle numbers should be out in a little bit. We are in earnings season. I know some of the bigger tech earnings are later on in the week, so we will be reporting on those when they do happen. As far as other numbers, we did have this morning a ton of numbers out of Europe, PMI numbers out of Europe, and then we had PMI numbers out of the US as well. Services PMI came in at 51.4. Forecast was 52.6. Manufacturing PMI came in at 50.7. Forecast was 49. Home sales came in at 0.724 million. Forecast was 0.685 million. And we had crude oil inventories, which is always a miss, came in at 0.244 million. Forecast was 1.55. Uh, but as it's been for the past 2 months, Coach, the news isn't the planned news. It's all of the headlines that we hear coming out. Yesterday, we may have heard that there was a deal on the table with China, or at least terms of a deal on the table with China. We saw the markets gap up, and then we had uh, the Treasury
Secretary.
Secretary. Besant speaking this morning. We did play the press conference on Topstep TV this morning. What did you get from that, Coach?
I was a lot of talking
Yeah.
without saying anything. Um, I think it was disappointing for the market that it was more conjecture. That wasn't solid. I think that the market was really looking for kind of a QE type of deal.
Mhm.
Um, and we broke after that, but there wasn't, I mean, there was nothing earth shattering in that I saw.
Yep. One headline that we have: no unilateral offer from Trump to cut China tariffs. So until it's resolved, it's not resolved. Is the way that I'm looking at it. All right. We did have some interesting markets in crude as well. Headline coming in: several OPEC Plus members want the group to approve another accelerated oil output increase for June. So maybe more oil supply, which should drive the prices lower. And that is about it as far as the news goes. Anything else you got, Coach?
Um, no, that was interesting on that, the timing of that OPEC announcement
Mm,
right around when Bassett was talking. Um, we broke really hard and then stopped,
yep,
but we'll go into that later. But
for sure.
other than that, yeah, I think the biggest news was Besant, which really was kind of a not, I won't say nothing burger, but it wasn't earth shattering. Actually, the biggest news is this earnings is helping. As we talk, it stocks are rallying.
Yep. Yeah. S&P is trading 54.25. Let's take a look at the quote board. We do have 35 different markets that we can trade with top step accounts, not just the equities. And today to the downside, we had the Swiss franc down 1.46%, crude oil down 2.09%, and gold, our biggest percentage mover to the downside, down 3.25%. To the upside, we had silver up 2.16%, micro Bitcoin futures up 2.49%, and the NASDAQ, our biggest percentage mover to the upside, at 2.77%. To round out our big four, we already talked about three of them. Crude down 2.1. We have the S&Ps up 2.09%. We already mentioned gold, biggest percentage mover to the downside, 3.26%, and the NASDAQ up 2.7%. Uh, Interesting day here. Interesting day here for sure. I am on an S&P chart here, Coach. What are we looking at in the S&Ps
Well, look
on
what
a 30
happened.
minute? Yep.
We got over the 200 at the close yesterday, and we gapped. Um, Basically, we've held that gap. Um, this was but all on the news of possible, and I say possible. They're agreeing to terms to negotiate. Um, but the market is what we trade. Um, had that huge gap, came tested it late in Asia. Um, it was kind of weird last night. Look at the very small volume.
Yep.
Um, and then I guess London opened up. We
Started to
can,
buy it a little.
yep. And boy, it was off to the races from there. Um, I've been anchoring VWAP to the London Open also. It's been helping.
Oh yeah, for sure.
Um,
Good spot to
um,
anchor. Volume comes in there.
yep. Um, well, what can you say? And I would hand it off to you about a price near the high and
Yeah.
volume.
So we got a comment from Sean, question from Chauncey. With Trump, and I I always hesitate to use the word manipulation, but Chauncey's comment, just going to read it. With Trump manipulating the market, how do you read the non-follow through today? So let's take a look at a couple things. Let's go out to a daily really quick. On the daily chart, we've been talking about this April 9th candle, the high of that range being 55.22, the low 48.66, 50%, 51.94. We held at 50% yesterday, and we talked about if this holds, then do we see the market trade up through the 20 moving average, which if we close where we are right now, this will be the first close above the 20 moving average since March 25th, right? If we close, and this has been a level that we've kind of been tracking here. So let's see how this closes by the time we get off of at the buzzer here. But the lack of continuation, I got long this morning, right? It looked like okay, we might be making a deal. Markets are pushing up, kind of coming into fast markets, understanding that hey, you know what, the market's already up 2.5%. Are we just going to continue to rally? It has to be really good news in order for us to do that. But we saw a spike of volume come in uh, pretty early on into the session. I'm going to go down to a 3 minute chart, and we see this spike of volume here, Coach. This is 8:36 a.m. And what's really interesting here, and I'm going to scroll on this the DOM on the right side. Uh, if you guys don't know, the DOM on the right side shows you volume profile. So you can tell what is trading at what prices. I'm going to see if I can make this font a little bit larger so we can actually see what we're looking at here. But you'll hear us on Topstep TV calling it out all the time. Hey, there's 1,000 lot at such and such price in the S and P's. And what we want to watch when that happens is the market's reaction to it. Uh, so while we were trading during fast markets, there was 1,000 lot that got put out at I think it was 54.69, got filled, no problem. They threw another one out, 54.80, filled, no problem. And the reason I'm watching these from an order flow perspective is somebody's throwing out size, right? Selling a ton of size. Is the market convinced enough to buy that size or does it run away from it, right? Sometimes you guys ask, how do you use the DOM? This is exactly how we're reading it, right? So if someone's willing to sell a ton of orders and the market has no problem buying it, then I'm thinking, okay, as long as they continue to buy these bigger orders, we should be good to go. Uh, there was 500 contracts sitting at 5,500 evens in the S&P. If you guys look at this volume profile and you look at what the high of the day was today, 54.99 and the orders, right? 54.99.75. There was not one contract or not one person in the world that was convinced enough to buy the S&P, not even one contract at 5,500 even. That is a telling sign, coach, of the environment that we've been in, and we've been saying that this market has been sell every rally. And you know, in hindsight, should I have just gotten short my entire account right there and put it a point above 5,500s? Because if the world wants to buy it, then sure, let's do it. But there was not one contract. And you can see it on this volume profile. You can see where the high of the day was. Not one contract. The S&P did, sorry, the micro ES did trade 5,500s, but again, these are different markets. Um, Not one, right? So all of that buying, what looks like buying, the market's up, 3.5% at this point. All of these bigger orders are getting thrown out there, and they're getting filled as well. If that's the case, and buyers are that convinced, coach, they should be able to take out a major level. And the exact opposite happened, right? So we know there's two sides to every trade. Not only is there somebody maybe market buying some of these orders, those could be stops getting filled. Someone's passively selling up here as well. And if I sold, you know, and we're going with the assumption that they were selling to open that position. We don't know what they were doing. It could have been a hedge and all these other things that comes up. Uh, if I sold 2,500 contracts, 3,000 contracts, 5,000 contracts up here, pretty happy about the results so far. Uh, and go ahead, coach.
It's interesting. Look how many times it went up there.
Oh yeah,
3 times, 4 times.
yep,
Um,
yeah. It checked it a couple of times, so they buyers had opportunities. To recruit your grandson in the back.
yeah,
We
he's
we
playing video games.
it's all good. And a lot of times, people will say, why do these orders matter? We don't know what they're doing. It's spoofing. It's hard to tell. And I think the way I like to look at it is whether you're selling to open a position or selling to close a position, you think that there's probably no more room left up to the upside in the markets, right? If I'm selling to close a position, it's because I'm long and I'm getting out. If I'm selling to open a position, it's because I want to get short and I don't think the market is going to continue to go up. So, the way I look at it, you throw out that much size, whether it's a hedge, whether they're short, whether they are flat on a long, whoever that is that sold that much up there is happy right now and continued to sell, right? We can see all of the volume on this volume profile. Now, what we don't get is the delta information. But again, right below those highs, 1,400 contracts traded at 54.98. Another 1,200 traded at one tick below that. Uh, so a ton of volume executed at these highs, and we see what the result was. Uh, Jen and John, you had asked that question. Where can you find the recordings? We are going to work on that. You answered that question earlier on. We're going to work on the recordings. They're not listed right now. Um, so we had this highest volume candle, coach. We talked about this one, right? That pretty much set the range for the day. And then something you talked about here with VWAP when we were in. It's all good. Don't worry about it. I see you post a question like 6 times, so I just wanted to make sure we answered it. Uh, but we had the full session VWAP, coach.
Yeah, we were what, 5 ATRs away, 10 ATRs away.
Right.
But the full session VWAP, look at the low. Uh, w- we were still above it,
Hmm.
and it was interesting because you talked about there was that large volume selling there, um, which was interesting because it was the high of the candle of the 90-day pause.
Yep.
I mean, all these, and it went up there how many times? Kept on selling it, but two things here: VWAP never leaves the range, and that for a 3-minute range. What was the size of that range? 50 points, 55 points, something insane.
This candle here was, yeah, 55 points in 3 minutes.
Yeah, with that huge volume. Now, background. It was like you said, it was already 2.5% higher.
Yep.
Um, so as a matter of, one of the things about spoofing, I think it doesn't happen a tenth as much as people think it does. It used to be a big problem when electronic trading first started. It's kind of hard now. But you could see 1,000 lot offered and get canceled.
Yep.
Now, with all the options, with the size of the volume that's now trading, um, but biggest point was how many times does the price trade up at that on the 5,500 can't get through. We have all those other factors, but biggest thing is look at VWAP.
Yeah.
It's below and it's starting to flatten and the 3-minute flatten out.
Yeah. It did.
Um, and it was no surprise when we got under VWAP on the session.
Which is this yellow line on my chart here.
Yeah, it's almost measured. It was about the size of probably, I think it was a 55-point break from the open, and it's about the same size. When we broke that, all that buying from the openings, the way I look at it, it stopped.
Yep.
Shorter term traders got stopped out or had a puke. I was one of them. Um, but that's the opening range trade. I take it every morning.
Oh yeah. Yeah. It's going
I
to
will
set
take
up.
it again. Yeah.
I mean, it was a good trade this morning, right? If we look at the 3 minute opening range, the crazy thing is it's that volume, that high volume spike came in 6 minutes after the open. I think there were some comments, and it kind of just ran through the low of the opening range and then spiked up, and that ultimately became the range for the day, right? Sometimes we talk about, is the opening range based on time, or in some of the markets that we trade that are almost, more 24/7 markets, is that opening range really based on when that volume starts to come in. And then if we see it from there, right, and The funny thing is, coach, we don't know that's going to happen. I'm just taking the trade that sets up in the first 6 minutes. But then something like this happens and it changes the environment a little bit. And we can see from that point, flat view up, uh, you know, range bound market, and really just traded both sides. Are we trading with less information than some other people? Yes, 100%. But I don't think, I don't look at that as a disadvantage.
Um, well, absolutely. I mean, the hierarchy of the flow doesn't, they're not going to give us an email or a text, hey, we're going to sell it or buy it. And I'm not being just that we don't get that. And we're never going to get that.
Right.
But we do have information that we can create a trading plan or a process. Um, because it's actually a very good question. That's why we have nothing but uncertainty. We're certain of that,
Yep.
right? So that can, in trading, it's really looking for certainty is going to cause a lot of problems. Um, there's no 100% trade. If someone tries to sell you that, run the other way. If there was certainty, we wouldn't have markets. So, yeah, there was I mean, look what on that large candle when someone said buy it.
Yep.
Um, it was too late by the time we got that news. So I actually like the question. Yeah, we're that part. We're never. We're retail.
For sure.
All right.
Yeah.
But we can read the output, and that's what the focus should be on.
Yep. Switching over to the Nasdaq chart really quick. Similar thing here. And what I kind of want to, I've been trading the S&Ps a lot more recently. I do not have the Nasdaq enabled on my Topstep accounts or my personal account. And one thing I want to show, and the reason for that, we had that same volume spike in the Nasdaq here, right? The low of that move was 18,914. In both the S&P and the Nasdaq, this volume spike was an important level. But the way that the Nasdaq does it, it runs that level by 50 points before it says, okay, we're done trading here. If I look at the S&Ps and that same volume spike, we rejected right at that low. So we said it before. And I think this is a perfect example. Maybe we can do a side by side chart, but uh, the S&Ps just respecting levels just a little bit more than the Nasdaq. Um, Makes it, at least for me, and everyone's gonna be different, but more of a comfortable trade in that case, where we can see those rejection at these lows. The Nasdaq is gonna run that about 50 points before it goes. His royal trade says Nasdaq actually kind of sucks. Uh, I don't disagree. I don't
Well,
disagree.
in defense of Nasdaq,
Yeah.
I'm not, the S&P 500, S&P 500, the Nasdaq's 100. Out of that, the seven, I don't tell you the seven stocks that make up probably 80% of the movement. You can't with 500 stocks. It's a much smoother, broader based index. It's not. It's going to hold technical levels better by default.
Yep. Yeah. And it's Tali says, love the NQ because I'm an adrenaline junkie, but I really appreciate how you point out it loves to run levels, then retrace the other indices. Yeah. So as long as you know it, right? As long as you know it and you can say, "Hey, I measured here," but it's almost, I feel like a lot of times with the Nasdaq, if you have a general area that you're looking at and you're saying, "Hey, the correlated equities might reject here as well," it's almost a better trade to let it run the level first and then trade it on the way back through it, with the Nasdaq, because we don't know what the run of that level is gonna look like. Um, I mean, if it runs at any more than 50 points and we get into 100, maybe it just wasn't a good level. But I think as long as you know the personality of the market, then it makes it easier to trade. Uh, I just, I hear my
You're
elder statesmen say they don't want to trade the crazy Nasdaq, and I'm getting up there So I'm with them. Uh,
Who would that be?
you Hogue MP now. MP says he's no longer a Nasdaq trader. He trades the S&P, and we can see his results. He's been killing it over the last 2 weeks trading the S&Ps. So I think there's something to that, right? All right. Anything else on the equities, Coach? Did we
Oh
kind of go
no.
through it?
I'm just seeing the biggest part to me is, did the Nasdaq close above the 20-day moving average? I know the
Let's take a look.
S&Ps closed right at it, a little bit underneath.
Yeah, we're over it. We're over it right now. And remember that was a big goal.
So with a gap, um, hmm, tomorrow's gonna be a big day, I think.
Yeah,
Can it hold this? What was the volume? Today's volume, was it big volume or was it
take
average volume?
take a look. We were pretty
Ooh,
much right at the average.
not
722,000 contracts traded, average is 765. So volume building a little bit over the past couple of days. It's higher than we've seen over the last 5 or 6 days.
Yeah, I need a little bit more than that. To me, to be confident that this is more than just a short covering rally. Um, tomorrow, yeah, I think is going to be a really big day either way. I don't think it's going.
Right.
I have a feeling it's not going to sit right here.
Agreed.
Um, that's all I have.
Awesome stuff. Thank you for that, Coach. Right. Let's get to some questions really quick, and then we'll go to gold and crude oil. We got to that one. Nothing says I always find myself taking profit before it hits my take profit. I see money and take it. Any advice on staying more disciplined? You're talking about two different trade management styles. There, nothing. Are you going to be the trader that takes profits along the way and has a general idea for where you think the market can go? Or are you going to be the trader that sets a take profit and says it's either going to hit it or it's not? Um, I don't think it's possible to be both, right? Because you're going to switch back and forth and you're always going to question whether or not you're making the right decision. So pick which style you're going to use to manage your trades and stick with it. I was talking to a trader in Discord earlier, and they had a profit target in the S&Ps that, the market got to within 3 ticks of their profit target and didn't hit it, right? And they're just like, "Oh man, that's super frustrating. I don't know if it actually hit their profit target, but that's the management style that you chose." Um, so it in that comment itself, you're talking about two different styles. Pick one and stick with that one. What would you say about that, Coach?
Absolutely. If without knowing further detail, how much you're impatient about reaching your profit target? Is it because it's like within 5 ticks or 3 ticks? Or is it because it's halfway there and you don't want to give back any money?
Yep,
That two different things. If you're uncomfortable, if it's near that, let's say it's by two. If you're, let's say S&P, if your target was 50 even, or 5,000, and it doesn't get filled there, I don't mind putting it a point under or 2, 3 ticks under. But if you're just at the 20 ticks, you can't do that.
yep,
Um, you can't because here's the thing: you have to be consistent. You have to, if you have a trading plan, you have to execute the trading plan, because
agreed.
every time you don't, you know you're polluting the plan. So one of the things, if you also, you probably need a little more time in experiencing your trading plan. What I mean by that is, don't watch it. Here's what
Mm,
happens. You watch tick to tick to tick to tick. So if you're up, let's say I'm just taking an example, your profit objective was to make 300. All right. And it starts moving your way and it's up 100 and it's not, it goes back. And this is very possible. It goes down to minus 50. Anxiety.
yep,
Damn, damn it. Now I know what's going to get, I'm going to get stopped out again. And the market knows what I'm doing. I suck. All the negative results of anxiety come out.
Yep.
Um, you get out, and then you eventually watch it hit your target. We've all been guilty of this. So if you're staring, watching every tick, it becomes a competition between you and the market. And the market doesn't give a damn. The market's neutral. It's
Yep.
never lost. It's never won. It's so my suggestion, if you really are confident and you've seen it hit your target or and you've gotten out consistently, bracket that order. You have your stop and your target. Maybe take a few ticks off your target. I don't, and it's okay. And then go do something else. If it's based on a 5 minute, come back in 15 minutes. All you're watching isn't going to change the market at all. All it's going to do is build up anxiety. And that's the one that's pushing you out. I've experienced that. I understand that. Like a good trade now, I still don't want to watch. I would just put it in, go in another room and watch Topstep TV. And while you're at it, hit the like button. Then you can trust your process. You can trust your trade. Get away from watching every tick. It's
It's yeah. For me, I know my management style. I've been in, and we've talked about this before, right? And I see somebody in the comments saying it is possible to do both. It is. But I think again, it opens the door for a lot of mental gymnastics for asking yourself whether or not you made the right decision. If you choose one way and that's going to be the way that you stick with, then you don't have to think every single time I take a trade, did I make the right decision? What do what is your thought process when the market ends up doing what you expected, or oh, this should have been the time where I trailed, and then the other time I should go with a profit target. Just pick one. For me, I know that if I see a trade come to within 3 ticks of my profit target and stop me out, I'm ready to quit trading. Right? So and it's always been that way, right? So it's always been an emotional response for me. So I know it's just like, okay, it'll be easy. I know I'm probably never going to catch a full trend with full size. I might take, 20% of a trade to a full profit target or where I think the market can go, but along the way, I'm going to secure some profits, and it just a more secure feeling for me. I could always get back into a trade is the way I see it. So it really depends on how you want to go ahead and manage your trades. Uh all right. Let's see what we got here. Coach Paul, you look at a 30-minute opening range.
good question. 30-minute opening range for swing trading, 3 to 10 minute for day trading. I used to use the 5 for day trading. I've been my eyes have been open with Coach Jay. So I use the 3 minute. You can use 1, 3, 5, 10, whatever. But a half hour is more for swing trading, where it sets the tone. And I've changed in the last year, um, because the most volume comes in early. Um, and to me, that sets the tone. That's where I want to start trading in the equities specifically. Um,
So, a couple more comments here. We'll stick here on the equities. Hitesh has, can you talk about gap up or down in the market? How would you trade it? If the market gaps up, like we did today. I've been trying to limit my overnight trades unless I'm on slow markets with Dakota. So a lot of times I was actually doing the mindset class when we gapped up. So first thing I'm going to do is be aware of it, and then uh, I want to know how big that gap is. Right, in the Nasdaq, for example, it was about 3% by the time we got to the New York session. But here's what I've been doing recently, and shout out to Coach Paul again for this suggestion. Is just looking at regular trading hours, right? Regular trading hours, it's a lot easier to see what that gap is, measure it out, 18,380 at the lows here, and it just doesn't have to be exact, right? Just kind of general area to where we gapped up regular trading hours, and now I'm watching the market's response around this general area. Do we trade back into it? Do we gap and just go, or do we fill the gap at all? So right now, I would say that we're trading in the gap. I would be looking at this 18,950 ish area as the high of that gap. The market rejects here, then I'm looking for rotation back to 50% of it, and then a full close of the gap. But what about you, Coach?
I use I started using both. You know, I get in
Yeah.
it. I like for the trading decision for the day. Not I don't whatever happened at night. We had a little bit of this discussion in a green room. The night, because of volumes a lot less, is
Mhm.
and this is equity specific.
Yep.
What I'm saying is stock indices because the volume still comes in on the New York Open. That sets the tone. That's where the players are. Um, and look, another thing you notice, look at the average true ranges if you just use the day versus
Oh yeah,
using night and day. They're a lot different.
a lot different.
Um, so to me, it's refreshing. Just that it's today. It's a new. To me, they're two different sessions. And I really, my eyes were open to that. Um, so using that candle, it it's going to be different and different for a good reason because it represents the true volume of the the play the institutions. The only time an institution would do something at night if it's forced to. That's why we see these huge swings on earnings, like especially in the cash market. It's but the volume is only percentages of the day volume. There are exceptions, like when we had the tariff news. Um, but wow, what's that view app, Coach?
To yesterday's high of day. I think that's what Brad might have been talking about here.
Hmm.
Um, that's what
Try
Brad
that
might have
from
been talking about.
the other gap.
What do you mean? This one? I don't know.
Yeah, every day is a gap.
Is it a self fulfilling prophecy? If I draw enough lines, it's gonna hit it eventually. But I do like view up from that yesterday's high day. Nice target there. Uh, all right, let's
All right,
keep going here. Let's get into gold. I think we answered our questions. We'll get back into markets, and then we'll end with some questions as well. And a really nice comment also. Thank you for sharing that, Andrew. All right, gold, Coach Hogue JD and I were talking yesterday about getting a pullback and buying and holding a position in the house account. Uh, what are we looking at here on the daily?
well, we've been talking. We had that spike yesterday at all-time highs, um, with a massive wick. And one thing we talked about is look at yesterday's low. So let's make a line at yesterday's low.
You talked about this yesterday.
Yeah.
Talked about this yesterday. Yesterday's
Anytime you
low, 30. Let me get that exact. Actually, why am I drawing that? Top step levels has it. But 30, 33.79.10.
33.
Yesterday's
So
low.
let's go to the half an hour hunts last night. Starting with last night. Now remember we talk about gaps and volume.
Hmm.
Gold volume can come in at any time.
Anytime.
It's 24/7. It never shuts down. So with that level in mind, let's look starting last night and let's attach a VWAP.
What is that
Hmm,
white line right there?
that's 200 bar moving average.
This is a 30-minute
Uh,
chart.
it now here is a gap. down. We gapped with everything else. Held that first. Now I use someone's asked. I use the half hour at night. Um, Slower most of the time. Ask Coach Dakota. Slow markets, right? When it's slower and there's less volume overall, not every night. Um, I use a bigger time frame. So here in the gold, the half hour, boy, you talk about filling a gap, almost to the tick. By the way, old school. I'm an old school. Gap isn't filled till it hits. It touches the settlement.
Okay, nice.
Um,
I'm the same way. I'm the same
yeah,
way.
that
Yeah, unless it hits settlement, because if it doesn't hit settlement, then the market is still. If we gap up and it doesn't hit settlement, the market, even if we close to a price, the market's still positive for the day, right? I think
yeah.
about that gap fill as this is the line in the sand where the market is either green or red for the day, and that's the gap fill. So glad we're on the same page there, Coach. Go ahead, keep going.
Now, it's that dramatic move. Look, what was that? How many points? Dollars? What? No wonder I didn't trade it. I saw that. What was that?
50
$50.
in a half an hour, and really, it happened a lot quicker than that. If we go down to a shorter time frame, it was
No.
the first candle. I'm looking at it 3 minute. It was that first candle.
All right. Now we talked about yesterday's low. Let's see what happened when we got through. We gapped through yesterday's low. It's that white line. Let's blow it up. We traded around there. One, two, three, four times. What I would find interesting. Let's use that. When did it close above? I've
Close
been doing
above
this lately.
yesterday's low.
Yeah, let's just whatever candle we have, which one closes above, and
Is
let's
that one right
which
there.
one. All right. Oh, now we got a new opening. Um,
That was also
that's
that the outside of that crazy volume, that was the highest volume spike
ah,
last night.
wow, good
Isn't it funny
catch,
how
Dan.
that works? Isn't it funny how that works?
Um, I see. Said the blind carpenter. Um, wow, and then we went right to it filled the gap. But look what happens there. When I said that was a really important because of yesterday's action.
Mhm.
Um, VWAP stayed in there in that, but in this, where does it fail? When VWAP gets underneath. Boy, that was some crazy trading last night.
Yeah. Yeah, I mean, all of this price action we're looking at, we're still Asia, London right now.
But now we filled that gap, and we could actually go. Where did it fill the gap? That's another one. Because we talk. I mean, this is. I'm old, and when I was young, I was taught this, so it's been around a long time. Um,
We never got a
let's
settlement test.
okay, but the gap is filled at the settlement of the last print.
Okay, got you. So this price here,
Yeah, I should the close.
got you. Close, not
No,
settlement. Got you.
we close the gap on price.
Mhm.
That was what is that? From the bottom to that was that what is a $70 move?
From this low, yeah, about $80.
$80 in what? Yeah, if you're trading big gold, you got to have big,
Big
big
pockets.
money.
Big
Yeah.
pockets. There was a question in the chat. How do some of these people make 40K in a day? How do they hold through these trades? Uh, just going to be honest. Can somebody make 40K on the first day of an XFA with a $4,500 drawdown? It's possible. Market conditions have to be very specific, and you catch the perfect trade with no drawdown. But somebody making that much and doing it consistently,
Yeah,
it's
that's
a
good.
function of the size of their account. right? It's a function of the size of their account where they can trade bigger size relative. If you're used to trading 5 micros, right? Somebody might be trading 5 minis or 10 minis. Hopefully, they're doing that, and it's a fraction of their account that they're risking. And the numbers get bigger as your account gets bigger. The numbers get bigger, and that's why we say all the time it's okay to be small early. If you get into an XFA, you don't need to have a $200,000 balance by the end of the first week in that XFA. If you compound it over time and you can say, hey, I trust my trade setups, I'm going to keep taking those, then you can scale up as your account scales up. And then those become more consistent. And is it 40K every day? Probably not, but it becomes more consistent. Um, or that's the
Hey,
way I think it should work. Go ahead, coach.
y- you just said that. That's why there's consistency rules.
Yep.
Um, and by the way, it can you do that over time? Or, and maybe I'm not going to put anyone down if that was part of their plan, but that's a rare bird.
Yep.
Um, so can you be that patient? Um, but as I say, you know, a large percent of the time we don't hear them when they give it back in 2 weeks. I'm not saying everyone does it, but I've done that. Like, oh wow, this is easy.
Yeah.
And then I'm gonna, then you fall into many other traps, but that goes back to consistency. And you could do, hey, if you wanted, but I don't recommend this. This is you only live once.
Yeah.
Once it filled that gap when we were just looking, I'm gonna put 5 gold, big gold on.
Right.
All right,
So you put on
you
five
have,
big gold, you get short right here. You close the gap. Go ahead, coach. Keep going.
yeah, yeah, keep it. So let's say you sold 5
Mhm.
there,
You're out. Done.
done. Your
35
account's blown.
$3,500 loss. You had everything exactly right. Done. Right there. Now you think you have all these psychological issues and why can't I trade and why is this so hard? All it was over leverage in that moment, and you had the high of the day. But if it's not exactly perfect, that's it.
And so, it can happen. Maybe if you have a trading plan looking for that,
Yep.
um, but you're not going to do that consistently. And, um, that was the trade though. So I
Yeah.
think we learned something today. Don't sell gold in a gap,
Yeah.
$50 gap.
Right.
I mean, these are lessons really. Someone asked more about, this is part of the process, always learning, cutting losses. You should have this in a journal. Days like this is important. So when you go in in a journal, like gap days, large trading days, high volatile days, you keep a file and go, okay, decisions made that I made, what would be a better one?
I didn't mean to bring this up. I was gonna
Huh.
But this is perfect for what we're talking about right now. Andrew, thank you for sharing this. I got to work on my production value. I was supposed to blend this into the shot, but this is from Fatima, right? We seen her on Topstep TV. Great comment that we have
Great.
here. Cutting losses is not admitting defeat; it's taking control. Exactly what we're talking about here, right? Understanding when you're wrong, um, and that's really powerful, right? Fatima, big board trader. She's been in live accounts. I think she's still in a live account right now. Um, this is super important right here, right? Take control over your trading. Thank you for sharing that, Andrew.
Yeah, she's good.
Yeah, she
And
is.
then,
All right.
um, boy, we should put that in maybe we'll start a file of our for at the buzzer.
Right. Do it. Back to the comment of, how do some people make so much money? I've used this quote before, but I haven't used the Jay-Z quote in a little while on the show. He has a quote in the song "Heart of the City." I'm gonna paraphrase it. It says, "You don't know my expenses. I gotta buy a bigger place." Uh, right. So someone who's trading and making big money, they are comfortable with big swings as well. A lot of times we see, oh man, they made $40,000. That person might have had to be comfortable sitting in a $10,000 drawdown mid trade to make that 40 grand. You only ever look at the upside. Takes a lot to get there. And it's possible. It's possible for every single one of us. But if you want that and if you can stomach it, right? Everybody has a different risk appetite. Let's go over to crude oil really quick, coach. What are we seeing here in crude?
Well, what did we get up to last night?
20-day moving average.
Yes, we did on the daily. Um, and we wicked instantly. That was overnight. That also, I think that did that. No, it didn't. It rallied
Price gap.
last night with it with all the other rumor mills, and yeah, it did gap.
So crude has been very similar to an equities chart lately.
Yeah. Now,
Very similar.
um, I don't. If we anchor VWAP to that opening, I don't think VWAP left the range.
I don't think so. Huh, tried to.
We got close, but here's an interesting. There was a big an announcement by OPEC Plus, and a couple other friends, I guess, that they were going to increase production. Funny that was timed. I don't
That's
know.
it's clearly this candle right here.
Someone's was it our friends in London who knew this was all smoke
Maybe
and mirrors?
they
Was
started
because
selling
what
it early.
did it make the high in London?
Yep, made the high in London, right below
Right.
$65, right at that 200 20 moving average on the daily, and then sold off from there.
Okay. Um, but look, we don't even if you bought it early, once it gets back in there and under VWAP, we've seen this so many times. Take it. It's it's not a loss. It's taking control. Boy, that's
Yep.
fat, Fatima. That's awesome.
Yeah,
That is
great quote.
beautiful.
Well, what I like
Um,
about go ahead, coach.
so looking into it, actually, someone knew this announcement was coming. Um, but wow. But what did we have on that low? Well, we haven't broken. We had a huge volume of selling, but here, when we talk about um,
Exhaustion reversals.
the J exhaustion, it's got to break the high, and it didn't.
Yep. Somebody had asked what exactly the J trade is. Here's actually a better example. I mean, it's not a great one, but here would be a J trade to the downside, right? Where we had this exhaustion to the upside, we had this high volume, we closed below it, and then you're short below that. Uh, it just happens that this close below was a dollar and 50, cent move. But on this high volume that Coach Paul is talking about right here, we bounced back up and kind of held 50% of that. If we can look where VWAP is, it's kind of staying in the lower 50% of this range. This is a huge range in crude oil, right? And in a response to news, so looking at whether or not the market follows through or is that just a knee jerk reaction and we recover it, we never got to above 50% of that. And we kind of, that's exactly where we rejected. That could be a nice trade opportunity here in such a wide range. Coach, do you ever use price averages for the day?
Um, price averages for the day.
Yeah, I'm trying to make sense of that one too. I think what
Moving averages for the day.
I'm thinking that question might be asking, looking at daily average ranges.
Oh yeah. Uh, p- f- as part of my daily levels,
Mm,
I use the average true range, and I add it to the settlement price from the day before, and then I subtract it. And then that one is I watch that a lot. If I'm short and it hits that and I have good profit, I'm done. Doesn't happen enough, but yeah, I do. It's like I said, you'll see that on my daily levels. It's a great question, and that I use the average true range, not
uh,
the daily. There's a little difference,
yep,
but I like the dynamics of the average true range, um, because that fits in line with the volatility. Um,
it was a great question, coach, but that was not the question that the trader was asking.
oh,
They were asking, do we look at the underlying price of the markets that we're trading? I don't know that you do either, but Jack does on Topstep TV. How do you draw those
yeah.
rectangles? Let me answer this one really quick. The tool that I'm using to draw this rectangle is a fib tool. Fib retracement is in the drawing tools, three down, three icons down. You have fib retracement, first one in the menu. Just click on that and it gives you the fib tool. For me, I took all of the levels out of it. I'm just using 0, 50%, and 1. Um, you could also just use the rectangle tool, right, which is 6 down in brushes, shapes, rectangle, and then you could do the same thing. I could use the rectangle tool. I don't know why I think I use the fib tool because I'm using a hotkey, which is Alt F, and it's just easier than doing Alt Shift R. But I'm just looking at high, low, 50%.
It also gives that 50%, which
Gives me the price tag. Yeah,
yeah, which is relevant.
I think so. All right. Got a couple more questions here. Tanner Mackin asked, he was saying, Coach, you had said something about volume before, where you might be looking at the equities, like let's say on the New York session open, where the volume is high. Is there anything once that volume kind of slows down during the middle of the day, do you go somewhere else to look for opportunities, or what do you look at when it gets a little bit later in the day if you haven't taken any trades?
Well, I have a specific one that's related to the opening range, and then I really don't. I'm done.
Yeah.
I trade for personally. Now, I would also look at uh, if there's a selling exhaustion or a buying exhaustion, um, at a high or a low.
Mm,
Um, that's the other one I would look at. I don't like I don't like trading past the first half an hour, personally. Now,
interesting.
there's also the initial balance. That's great, and there's a whole process of that. I don't.
We just don't do that here.
Yeah, and it's good. And
Coach Ray,
oh, Coach
if you
Ray,
join
Coach
Coach Ray's
Vince.
classes if you want to trade after the first hour in some of these markets, because that's his whole trading process. He literally does not trade in the first hour of any of the markets that he trades.
And he does well on it. So,
Yeah.
and
Uh,
with that, I just have to say this: learn as much as you can on different trading styles, and develop your trading plan because you have to execute it.
for sure. Uh, Coach Ray is great at, yeah, I mean, he's had a live account for a very long time at Topstep. And again, he does not trade the first hour of a lot of these markets. I got a 30-year bond chart up here, coach. We reject April 9th. April 9th is the new July 11th, right?
Yeah,
July 11th,
yeah.
2024 was such an important day for a lot of these markets. April 9th is mark out that range. And until the markets decide what we're doing with this range, we're going to stay in it. And again, we're delaying the tariffs. It's okay to buy. And it affected pretty much every market that we trade. So if I look at the 30-year, all we did was trade up to the high and reject back into it, but the equities did the same. A lot of these markets are waiting for uh, their new direction. What are you seeing here on the daily, coach?
Chop and slop on a longer term rate. Still, you know, it still looks very heavy to me. Um, let's look at the half hour. Like last night, it looked like it gapped and went, and it was
It's
a
like the
nice
equities.
trade there, a 2 to 1. And then it looked like it was just, huh, gonna go. Like everybody was ready for Besant, the Treasury Secretary, to say, we're gonna buy all your problems." Kind
Mm.
of a QE type of and he didn't. And it
Right.
was right at there. Um, and look, we went right back and finished right where we started from. And this is very, very volatile. This is very bonds are not designed to do this. What was the range in the bonds day? It was
Uh, let's see. You
here
know
we
I'm
go.
not gonna know how to quote this, but it was a
How
2%
many
range.
2% range.
Yep.
The bonds are supposed to be in at a 0.5% range.
Right.
Um, look at that's still bonds look very heavy to me. If this well, nothing is this is nothing has been agreed to,
Nope.
and we know this from the past. It goes literally moment to moment on this negotiation. I'm, we're coming, 2 days to Friday, and I'm taking no positions over the weekend.
Hmm.
I want nothing, none, zero.
Yeah.
Maybe because we see these gaps, something could happen over the weekend. I don't, and it's reflecting in this massive. We're in a trade war. This isn't a trade discussion.
Right.
Bonds, we're a debtor nation. That's, and bonds are showing it. Um, but there was some good. There was two good trades there. Um,
You lost the screen. I got you. I'm bringing it back up. Yeah. There was a
uh,
nice trade. There was a question here from Charles Benitez. How do you decide which candle range to pick? The ones at the swing points. You could do that for me, Charles. Um, like when we're talking about the daily, why am I picking this April 9th candle? One, because it had a ton of volume, right? And two, that day was significant. That was the day that, we said we were going to delay the tariffs, right? So we are the shortest time frame market participants with Topstep accounts, right? We're day trading. But at the same time, there's swing traders, there's long-term investors. So I'm marking out this range because if this is where long-term investors started buying, I want to see how they respond when we get up to these highs, right? Because I'd have to assume that either in the bonds or in the equities, when we get up here, the way I'm thinking about it is, did they build enough of a position to start pushing this market higher, right? Or are they convinced enough to continue pushing it higher, or are we selling from here? On a shorter time frame, all of these anchor points are going to go to high volume, right? Usually that's going to be around a session open, but like we got this high volume spike right here. We had it in the equities also. I'm going to anchor there. Sometimes it's going to end up being the high and the low of a range. Maybe this one is significant here as well, right? As we continue to sell off, we'll mark out that one, and then the only other thing I'll do is attach a VWAP to it and then see how the market responds around those ranges.
boy, that was fascinating. And that was right at the high of that delay candle.
Yep.
So
Yep.
sometimes, you have that framed out lightly, don't you?
Y yeah, so let's go back. Let's just put a line at the high there, and I know we're above time. Maybe we'll just go right into Coach Hoop and send you guys over to Discord with Coach Hoop. But yeah, that's that, we'll make it a yellow line, Coach.
All right.
You're on mute.
Oh, right there on high volume.
Mhm.
That's significant. And high volume rejected. And that's now when we talk about anchoring, that's one you want to anchor.
Yep.
And that was massive volume.
That was a
That
J trade to
got
the short side. Once we closed outside of that
yes.
range, closed outside of
Yep.
the range, shorting it here, risk could go 50% above the high. But we can see once we closed outside of this range, you could preempt this trade. But who's to say that this volume just doesn't continue to the upside? There was that higher time frame level that we were looking at, so you could be shorting there on it from a different perspective. But once we get this close, that's added confirmation. It's a higher probability trade. And anything we say here is for educational purposes only, not investing or trading advice. But if I see a setup like that, you see a setup like that on your charts, you can probably guess that I'm in that trade or upset at myself for not taking it.
Boy, that
All
was
right.
fascinating.
Go ahead,
I
coach.
didn't even see that today. That
Neither did
that's
I.
that high. Go, what we had. I'm going to take a minute to go back to that daily and again see why this is how tumultuous this trade war is. That big candle, the biggest candle,
Mhm.
that was a lot of that came during the president's Independence Day speech.
Yep.
Look at how big the selling volume was. And then we broke how many handles in 2 days? Bonds are not designed to take that kind of swing.
Mhm.
There was a blink in this war. And look at the volume on that day. And now we're in that range. Until something's settled, I mean,
Nothing has changed.
it look for those high volume. They're like
Yep.
3 times average volume, or more. Um, because it's upsetting to the market. Market makers are backing off. This is when the Fed could step in and take the bonds and put them in a cabinet and bring them out later. Literally, that's called QE. But this is like a rogue wave on the ocean. Um, I'll tell you what, something better get settled. This could be,
We get increased volatility.
yeah, if we can, you could say that, yeah.
Well, if that's the case, here are our price limits. Thank you,
Very
Andrew, for
good.
sending these over to us. Price limits, you can take a screenshot of these. Remember, upside limits only apply to evening trading. Once the New York session opens, we do not have to worry about limits to the upside. But if we do gap down or we trade down at 5% in any of the equity markets, here are the prices that you want to be aware of. Remember, if you're in a TopStep XFA or live account, want to be out of your positions or they will get auto liquidated. The exchanges lock limit down for some of these for these products at 7%. Tops up XFAs and live accounts need to be flat at these numbers here. Put them on your charts, uh, and we'll see if we get there. We are not in the clear. Somebody had asked a question earlier about sizing and ATR and things like that. At any given moment, we could see insane moves in these markets, right? Where we sit right now, right? We are still literally just waiting on a headline. And there's going to be a headline that coincides with a huge move. Thing is, in this environment that we're in, we don't know when that is. So can you on a shorter time frame, hey, this market looks range bound, I'm just going to size up. You can, but just understand that at any given moment, the ranges could expand and do that pretty quickly.
And you don't, well, first of all, if you're funded, you get caught, no, it just ruined, well, no one here that's in a, it really worries about getting a negative account balance.
Right. No margin
Top
calls with a
step.
with a prop account.
That's why they're so vigilant about it, because
Yep.
it's there. It's their risk now, and well, you'll be done. Yeah, and there's a reason for it. I've had customers go through that, and then it's not something you ever really want to go through it.
Nope.
So that's why it's there. You're trading other people's money. Remember, If it was your own, you can't get caught in there. So that's why it's there. If anybody's curious.
Trading OPM. Shout out to Dom Kennedy. All right. Anything else you have before we go, Coach?
Um, no, I'm kind of flabbergasted, tired. Um, boy, we didn't get to the currencies.
We didn't.
So I will save it for tomorrow. What? We could see a big move in the yen and the euro currency to the downside. That's all.
Good stuff. No one in the chat caught my Dom Kennedy reference. That was I got deep in my bag there. All right. Coach Hoop's doing a class here in the next 4 minutes or so in Discord. Make sure you join him over there. Show Coach Hoop love. We have Coach Ray and Coach Vince doing classes 6 p.m., 7 p.m. Central Time. Dakota with slow markets. I'll be with him on slow markets tonight, 7:30 Central. We have Aaron doing the London Open, 1:30 Central. D doing the Euro trade at 3:30 Central. A lot of content for you. Topstep is pretty much 24/7 at this point. Content and the tradertainment and the education. Take advantage of it. Come through, ask questions. That's our job to help you along your process here. Trade well, manage your risk. We will see you all tomorrow. Coach, you have a good one.
See you too. Bye.